The race to dominate the AI revolution is on, and tech giants are betting the farm. But here's where it gets controversial. Are these massive investments a surefire path to success, or a risky gamble? The world's biggest tech companies are pouring eye-watering sums into artificial intelligence, fueled by the promise of a boom that's already sent stock prices soaring. Earnings reports from Meta, Alphabet, and Microsoft this week revealed a staggering commitment to AI, with spending on everything from data centers to cutting-edge chips reaching unprecedented levels. Meta, for instance, has upped its 2025 capital expenditure forecast to a whopping $70 to $72 billion, with plans for even more aggressive spending in 2026. This surge is driven by a desire to compete with the likes of OpenAI, as Mark Zuckerberg himself acknowledged. During a call with analysts, Zuckerberg emphasized the transformative potential of AI, not just for new products but also for refining their core advertising and content delivery business. He bluntly stated, "The right thing to do is accelerate this," highlighting their current computational limitations. And this is the part most people miss. Alphabet, the parent company of Google and YouTube, has nearly doubled its capital expenditure forecast for the year to $91 to $93 billion, a staggering increase from its summer estimate. This reflects a growing appetite for AI-driven innovation across the industry. Microsoft isn't lagging behind either. Their capital expenditures for the quarter ending September 30th reached $34.9 billion, exceeding analyst expectations and marking a significant jump from the previous quarter. Satya Nadella, Microsoft's CEO, emphasized their commitment to AI, stating, "We continue to increase our investments in AI across both capital and talent to meet the massive opportunity ahead." He highlighted the real-world impact of Azure, their cloud computing unit, and other AI products. This AI spending spree has undoubtedly fueled investor enthusiasm, propelling these tech giants ahead of the S&P 500 index. However, the question remains, will these investments translate into tangible returns? Wall Street is watching closely, eager to see if the AI boom will deliver on its promises. Adifir Bave, senior U.S. economist at Bank of America, points out that AI-related business investments have been a key driver of the U.S. economy in recent months. To the extent that the latter remains strong, it's a bullish signal for GDP growth, he said. While Meta reported a rise in quarterly revenue, its profits took a hit due to a one-time tax charge, plummeting 83% year-over-year. In contrast, Microsoft's quarterly profits rose 12%, and Alphabet saw a 33% profit increase. The AI arms race is well underway, with tech giants betting big on its transformative potential. But the outcome is far from certain. Will these investments pay off, or will they lead to a bubble? Only time will tell. What do you think? Are these companies making a wise investment, or are they overestimating the potential of AI? Let us know in the comments below.